Well, the Chinese are hurting domestically. That's my judgment. I've been to China a couple of times over the summer. Yeah. Not just for these reasons, that is, tariffs and the threat of tariffs, but a general slowing in the pace of domestic market-based economic reforms. So you speak to the Chinese private sector, they are concerned about how this will affect business confidence, investment decisions and growth by year's end. Having said that, I don't see any real chance of a breakthrough this side of the midterms, because the Chinese judgment is they want to know what sort of president they're dealing with, a stronger one or a weaker one or just the same, what the Congress will be like, and will there be new administration appointments that affect their key interests. So my judgment, bottom line, is if there's to be any breakthrough on this, I don't think we're likely to see it until quite towards the end of the year.
Would the G20 meeting that's coming up be a potential time for that?
Yeah, I think a meeting in the margins of the G20 is a face-saving mechanism. It's one of the reasons we invented the G20. You have a regular meeting where people who are having a spat can actually sit down on the sides and have a chat. So I think that's useful. So that's coming up in Buenos Aires, I think, in November. Yeah. So therefore, that provides a way through. But keep in the back of your mind, as I've said on this program once or twice before, the Chinese have politics too. Face matters, backing down matters, and the real diplomatic craft here lies in how do you engineer a deal on the trade deficit, simultaneously set up a process to fix market access questions for investment and intellectual property without the Chinese having a face problem domestically.
Do you have a solution for that? Is there?
Well, I think if the United States tries to roll everything into one, which is we're going to fix the trade deficit and we're going to fix, let's call it the investment regime within China, all in one neatly tied up deal, it ain't going to fly. I think you can come up with a deal, my judgment, could be proven wrong, which actually reduces the deficit over time through a series of engineered measures on the part of the Chinese vis-a-vis American market access. But on the let's call it the investment environment questions, intellectual property, forced technology transfer, as well as the Chinese industry policy supporting what they call China Manufacturing 2025, state-subsidised rapid development of high technology, that's going to take a process with fixed timelines to resolve.
That come after 2025?
I think that will come, that should be a process which comes at the conclusion of the trade deal, let's call it the tariff war. But if the US side, and this is partly the divisions within the White House at the moment between those who want everything wrapped together, Navarro, Lighthizer, and others like Mnuchin and I think Wilbur Ross, who actually want to see this thing handled in stages.
So the Chinese also have this very ambitious or even audacious Belt and Road economic initiative throughout Asia and into Europe. How is that? How are countries reacting to that? How is that going? I mean, it's unprecedented in economic history.
If you do the metrics on it, which is, we talk about in the United States and the West about the Marshall Plan straight after the war. It was a terrific plan by the United States. It boosted confidence in Europe and had significant dollars attached. One of the calculations I've seen of the financial numbers around the Belt and Road Initiative, in current dollar terms, it's about 10 times the size of the Marshall Plan, involving about 70 countries. Here is one trick, though. The Chinese still have to provide the finance for it, and Chinese banks can't just print money on a continuing basis. Therefore, some of the constraints within the Chinese system is, how do we actually continue to afford this, given that many of these projects will not generate a financial rate of return? So there are some constraints within the system. And internationally, what's the reaction? It's mixed. In Sri Lanka, if you look at the port developments there, there's been a huge debate about the level of indebtedness which has been incurred by the Sri Lankan government. So there's a pushback. Other countries, however, are welcoming it. So there are mixed factors at play.
Kevin, very quickly, you said that the Chinese are worried about saving face politically, but they must also be worried about the economy politically. Push comes to shove, they're more worried about civil unrest that could rise from a poor economy or saving face?
The eternal dilemma of Chinese politics, or frankly, of politics generally. I think the bottom line is China has a deep pragmatism about how to handle what it sees to be the driver of its long-term political and economic, and for that matter, military power. That's the strength of its economy. They would like a deal. They'd like to bed this thing down. They'd like to get through it. So therefore, wisdom in the White House, I think, lies in knowing when to cut this deal. I'd like to know, I think what the Chinese would appreciate, and the rest of the international economy would like to appreciate, is when consensus is finally reached within the various contending parties in the White House as to what the final deal should be.
That may never happen. That's the president's decision alone, I think.
That's true, but up until now we've had about 2-3 false starts in missions to Beijing and missions from Beijing to Washington, which have fallen foul of a final agreement in the White House as to what the ultimate acceptable outcome would be.
Right.
So my urge of those in DC handling what is a mega relationship for the US, but a mega relationship for the world, is work out what you want, convey the message, and let's get this thing done.